This call is being recorded.
All right, everyone. It's David Barnett once again with another of the Holiday Chat 2018 calls, and just a reminder, all of the people that call in for this series of calls, they're paying for these calls. I give them a deal just because I want to be able to share some of these stories with you guys out there because it is so hard to actually get real information about what real people are going through in real deals. And so that's the whole reason why I do this. And of course, it comes out at Christmas time because it's a gift for all of us. Today on the line, I've got Ralph. And Ralph, why don't you give us a little bit of a background on how long you've been in business and the kind of business you have, and then we can get into why you called in today.
Hi, Dave. It's good to be with you. I've been in business for almost 19 years now, and I actually have three businesses in one. My main business is metals, and I also have a recycle depot
Can
and
you speak
a
up a little
surplus
bit? Can
store.
you speak up a little bit, Ralph? You're kind of faint.
Okay. I have three businesses in one. I have a scrap metal business. I have a recycle depot, and I have a surplus store, and they're all under one roof. I've been in business approximately 19 years, and I'm in the process now. I'd like to sell the business.
Okay, and you are kind of lucky because you've already identified who is going to buy it.
Yes, my brother who's been working for me for almost 15 years is very interested in taking it over.
Okay. And how far along have you guys gone in this process? Have you come to an agreement on a price and determined what form of sale it's going to be?
Yes, we've agreed upon a price, and the biggest thing is seeing what the banks will give us. Not all the paperwork has been forwarded to the bank to confirm the exact amount, but according to what they're saying, if the numbers are what we say they are, they're talking about $300,000 is what they'll give us, which is not about a quarter of what we're asking.
Okay. So the bank will lend about 300 and you say that's only a quarter of what the price is?
Well, we're actually asking for five.
Oh, okay. So there's a gap there. And is your brother putting any of his own money down? Does he have much of a down payment?
Well, he is going to be putting some down, but it won't be that much because he's using a lot of his money as collateral for the bank. Meaning that he has money in RSPs and things like this that the bank we're going to use for collateral, and his house and things like this.
Okay, so the money that your brother's going to borrow to buy the business is actually not leveraged against your business assets. It's leveraged against his other personal assets.
Yes, I would imagine it'll be leveraged somewhat against the business assets too. But they want to know exactly what they're buying, and they're going to put some against his own personal property so that it's to make sure that he's going to follow through with the purchase and
Right.
keep the business running.
So what do you want to figure out here? You want to figure out what's the options for the gap that's going to remain?
Yes, exactly. What's your opinion on how I should go about getting the rest of, say, the 200,000 back to me over a period of time? What ideas are best suited so that I guarantee that sooner or later I'm going to get my money back or part of the business back.
Okay. So what what the bank wants for collateral is an important part of this conversation because if they take something as collateral for them, it means that your position is weakened in making a claim against that thing if something should go wrong. So let me give you an example. If let's say they were only going to give him $100,000 and they were going to take his retirement savings and his home as collateral, but they didn't take any of the business assets, and you were going to lend him the other 400 over time, but you got to put a lien on the business property and assets, machinery, etc. If something were to go wrong, you would be first in line to retake those business assets. Okay. But
Right.
if the bank gives him say 300 and part of that 300,000 is to put a lien on the business's assets as well, that means if something goes wrong with the business, you're going to have to deal with the bank to get the control of the business again, because they're the ones that are going to have a mortgage against everything. So traditionally, bankers like it when sellers are owed money after them in the order of security, because what it does is it creates an incentive for you, who is a person that knows how to run the business, to come in and rescue the buyer if something goes wrong. So, for example, if the bank makes your brother a loan and they put a lien on the business's assets and things go bad, if they foreclose, they're not going to get nearly what this stuff is worth, right? But you could come along and you could take over the bank loan and take the business back. Now, if you think about that position in the future, so let's say the other, he borrowed 300 grand and let's say he agreed to pay you the other 200 over 7 years, let's say. For him to get into trouble to the point where he's not making bank loan payments, it might take a year or two. Who knows? So in your situation, you would have already gotten $300,000 on closing day, and you would be collecting payments for, let's say, a year or a year and a half on the money owed to you. Okay. So if things went bad for him and he ended up failing in the business, the banker would probably let you take the business back by taking over the payments to the bank. So you've already collected, well over 300,000 at this point, and you basically have the option of taking the business back just by taking over the payment at the bank. And what you would be able to do then is, fix the business up, get it going properly again, and then you could look at reselling it again. But let me ask you a couple of questions. If you did get a whole bunch of money on closing day, what would you do with it?
Would probably invest it.
You'd invest it.
It's going to
Yeah.
be my retirement fund, so I would invest it to try to make it turn over more and better.
And what kind of return do you think you would earn on the investments?
Well, the way the markets are going, it's hard to say. They're fluctuating so much, it's crazy. But you'd like to get at least a 5% return on it.
Okay. So do you have any idea what kind of interest rate the bank is going to charge your brother?
Not exactly. No, I've never discussed that exactly that much with them to find out exactly what they're asking. But
It's one of the
I
things you should find out, and here's why. Because I'm going to propose something that may at first sound a little crazy, but I'll tell you why it makes sense. And on my YouTube video, on my YouTube channel, there's a video with a guy named Ian, and Ian sold a business, and once he realized all these different moving parts, he actually decided that he would finance the entire transaction. And here's what something like that would do for you. You could probably get your brother to agree to an interest rate higher than what the bank will lend him money at. Because what you can do for him is allow him to buy the business without the hassle of dealing with the bank. So
okay.
think about that. If you just said to him, give me a small down payment, 50 or 80,000, whatever you can come up with, and I'll finance the balance over 10 years, let's say. And instead of the bank's 7% interest rate, I'll charge you 8. Now you can put a lien on all the business assets and you can be the first person in line. If something should go wrong, there's nothing stopping you from taking the business back right away, and you wouldn't have to deal with the bank either. What
Very
you
true.
would be doing is you would lock yourself in a rate of return that would be more of a sure thing than taking chances with investment markets. And
Makes
I've
a lot.
seen it. Yeah, I've seen it done actually many times, because what it means is that not only are you selling the business for the 500 grand, but you're also going to earn all that interest. And because you are the lender, you're the first person there, like in line for security. It'll mean that you can ask for certain things that, like what a bank would ask for. You can ask him for reports on his inventory. You can ask him for reports on his sales and whatnot. And you can keep an eye on the business so that if there were trouble coming, you would probably see it. I mean, he's your brother. So if you saw trouble coming, you'd probably speak to him and try to help him out. Right. But it
Yep.
might not be such a surprise as if you suddenly got a call one day from a bank saying he hadn't made his loan payments.
Makes a lot of sense.
Yeah.
Why give the money to the bank when I can be putting it in my own pocket? And it's not money that's readily needed right away. So, for anything.
Yeah. Well, that's what I always ask people. If you're just going to take the money and go invest it, why not invest in a business you know? Right?
Yes,
Which is
and
essentially what it would be if you finance the transaction. Now, is this going to be an asset or a share sale, or do you know?
was just an asset sale sort of thing.
An
That's
asset
what you
sale?
mean, like
So you're selling him inventory, land, buildings, equipment.
yes.
Okay. So if you talk with, a properly informed accountant, and you're in Canada, so in Canada there's a special ability for people when they sell small businesses. If they sell the shares, um, they can actually get a certain amount tax free. And the banks don't necessarily like to finance share sales, but if you are willing to be the finance this if you're willing to be the finance vehicle, then it's going to remove many of the reasons why your brother would not want to do a share sale. And so
Okay.
you could structure this as a share sale with you doing the financing, and what it would mean is that the money that comes out of this thing would come to you tax free. It can
Makes a lot of sense.
change the whole calculation. And with the right CPA, if you talk with them and show them what you're trying to do, they'll be able to advise you, for example, and of course your brother would have to agree on this, is instead of financing him at 8%, let's say, why don't you raise the price of the business a little bit and lower the interest rate? Because the dollars you sell the shares for come to you tax free, where the interest becomes taxable income. And
Okay.
so there's all, like, once the once the troublesome banker has been removed, you're then free to shape the deal between the two of you in the way that works out the best. And for your brother who's buying the business, the thing that is the biggest difficult thing for him is getting the financing. And if you take that on, entirely, then you've removed all the hurdles to him buying the business. And so to say to him, look, I'll do this for you, but you have to do something for me, which is to buy the shares instead of the assets. And this depends on how you got your business organized, and that's why you have to talk to a CPA, because um, it depends which things are inside your corporation and which things may not be. So I don't know, for example, if you've got the land in your own name or if it's all in the business's, in a corporation's name, or what.
I believe everything's in the corporation name now.
Yeah. So selling the shares of that corporation, could allow you to really get further ahead by receiving the money tax free. But it means you need to have an accountant who knows what they're doing.
Would most accountants understand this transactions? I would take it.
Most will tell you that they do. And then your follow-up question will be, well, can you give me some references of people you've done this with in the last year? Because
Okay.
here's the thing with accountants is that a large percentage of them spend their time filling in tax returns and preparing financial statements. Not all of them have everyday practical experience in setting up and helping people arrange these transactions. And so that's why you have to make sure you're dealing with the right one.
Okay.
Yeah. And and I don't know who your accountant is, but a lot of small business people fall into the habit of looking for the accountant who's going to do an accurate job of preparing their tax return for a really low price. And what ends up happening is you end up with that low cost provider who maybe is not giving all the information, advice, guidance, etc. that another accountant could be giving, who maybe charges a little bit more. And so assessing your advisor would be really important here for this.
Yes, it's interesting to know that. Like I say, nobody's ever, like, you think the accountants would introduce something like this, but obviously none of them have, and so it's interesting to know that there's an avenue there that could work really good for us.
Yeah. So have you talked with your accountant about selling the business?
I mentioned it to them, yes, but that's as far as it got. I just told them that we're in the process of trying to sell it, and we had a buyer, and that's as far as we got.
Yeah.
Um,
So you'll want
think,
you'll want to have a conversation before the lawyer draws up papers, because
yeah,
the way this works is the accountant will help you design how the transaction is going to go, and then the accountant will actually instruct the lawyer. He'll say, this is how it's going to be. It's going to be a sale of these shares and et cetera, and the lawyer will do up the paperwork based on what the accountant provides to him.
makes sense.
Yeah.
Sound like it's going to be, yeah, and it's to our advantage in all in all directions, and we have the guarantee is going to keep the business going, or the business is going to come back to us.
Yeah.
And we're going to make better interest on our money in the long run. And
if you can get the money tax free, then that just means you made what, like 30 or 40% more.
Exactly.
Yeah. So oftentimes when people are looking for financing to buy businesses, the bank, of course, prefers the cleanliness of an asset sale. It makes it easier for them to put a lien or a mortgage on a building or a property and stuff. And buyers are usually worried about share sales because it exposes them to liability, past liability for things that happened in the corporation. Those problems go away when you remove the bank, and then the problem of liability often is not so much a concern when you're talking about family, right? Because your brother knows you, loves you, trusts you, and if anything did happen, let's say he bought the business and suddenly something came out of maybe it turns out there was a mistake on a tax return 2 years ago, and the government is owed some money. Well, your brother probably feels confident that he could come back to you and say, look, you owned the business at this time, I need you to pay this. And you probably would, because it would have been something happening under the period of time when you owned it. And that's the big fear of buyers, is this liability and potential trouble from past things when you buy a corporation. And given the family connection, that concern could probably be mitigated or just be eliminated, just because the two of you you work together and you trust each other.
Yeah, makes a lot of sense.
Hmm. Yeah. Well, and I mean, especially because you said earlier in the call that you didn't need the money right away. You know, when I ask people what would you do with the money if you got it on closing and they have some kind of imminent necessity, you know, to do something specifically right away, then this doesn't work. But if you're willing to give time, you can make the overall package worth so much more to you.
You know, it certainly opens many doors, doesn't it? And like I say, where we don't need the money right away, and it'll be a regular income for us.
Mm,
It's not life is not going to change a whole lot, except that I'm not going to have to put all the time into it that I
mm.
have been, and he's going to take the reins and run the show.
Have you talked about a transition? Like, what are the things in the business that he does today? Is he doing everything, or are there still things that you're doing that he doesn't quite know?
Yeah, the computer work and that. So he's been on the road more than and he's so I've been doing a lot of the computer work. I'm slowly training him on the computer. It's taking
Hmm.
time, but it's it's something that's we're working on. And there's no reason why, like you say, in this case, where I could stay on with him for a while and give him a nice, clean transition, where he doesn't have to worry about anything, and so make sure he knows exactly what he's got when he takes it fully over.
Yeah. The place where I go to a shop where you basically buy grape juice and yeast and you make wine. You know, one of these winemaking stores, and
Hmm.
they just went through this between the father and son, and now the son is the owner, but he gave his dad a part time job, so the father is still there, uh, 15 to 20 hours a week, right? And it's get him out of the house, et cetera, et cetera. But an important function of that part-time job is this handover of the vast knowledge and experience that the father has, right? And you know, the what's the reason you want to sell this business? Like you're working full time, I would assume, and you're tired of that.
Yeah, it's time to. I always said a person should retire at 55, as long as they got their health obviously that's not a reasonable goal for the average person. But like I say, I turned 61 now, and I've worked hard all my life. I just want to enjoy it more and travel and do the things I want to do in my time.
Hmm.
So, but there's nothing wrong with working part time either. Like, the wife. If I go home and stay with the wife at the house, I know I'm going to drive her nuts, and she's going to throw me out anyway. So it would be good, like you said, to work part time possibly, and just let him run the show, and just keep an eye on things, and help him out any way it has to be done.
Yeah. Well, and if you're going to be involved part time and you're going to be still involved maybe in some aspects of keeping an eye on banking or keeping an eye on the major things like the sale of metal and all that kind of stuff, it can mean that you're going to be able to keep an eye on your investment as the lender because you'll, like I said, you'll see what the health of the business is. And if there's any kind of troubling things that come up, you can bring them to your brother's attention because he might not recognize things, right? With because he doesn't have the same experience as you. But when you start to see things, you can bring them to his attention, and all that's doing is helping to keep your loan more secure.
Yeah, exactly. Makes a lot of sense.
Yeah. Some of the other ways that these transactions are done between family that are not as tax efficient that I've seen over the years are, for instance, when they'll sell the business for a lower amount of money, but they'll have an agreement that the seller stays on the payroll for certain years, number of years, or the seller gets to stay on the company healthcare plan for a certain number of years. And what it does for the buyer is it allows the buyer to pay for the business through one of these other flows of cash that are an expense to the business and therefore reduce the tax burden and stuff, but they become a taxable income for the seller. So that a lot of the time when we're talking about how we're going to sell a business, the government gets their pound of flesh one way or another. It's just which side does it come from? And what makes this, the share sale kind of a unique thing that they do that's available in Canada is that the government allows you to sell your shares tax free. The other side of that is that your brother inherits all that equipment and property at the book value, not the fair market value. And so he doesn't enjoy the same kind of depreciation expense that he would normally have if he bought it at fair market value. So again, it's just tax liability moves from one side of the table to the other. But if you're going to
Makes a
solve
lot of
all of
sense.
if you're going to solve the problem of finding where he's going to get the money to buy the business, then, you know, he could pay some taxes too.
Yeah.
But I
Yeah.
mean, at the end of the day, you're probably going to do this deal. I mean, you know the business, you know what it can afford. And whether you decide to do this deal over, 7 years or 8 years or 10 years, um, at the end of the day, he's going to end up with all of the benefits and advantages that you've enjoyed. I'm guessing this business has been successful for you and has allowed you to save and everything.
Yes, it has. Very good.
Yeah. And so, you'll be passing on that great asset onto him. So that, and it's nice to keep these things in the family.
Yes, especially where he knows the business so well. It's not as if I would just give it to another family member. He's been here for 15 years and he knows the business. He knows the potential of the business, and he'll do well with it because he's a worker, and we get along well. So what you're saying, what you're suggesting, is actually making a lot of sense now.
Mm.
I never looked at it that way, and
When you're dealing with a stranger, like if some person you never met came along to buy the business, they also wouldn't be able to get all the money at the bank. And the challenge you would face as a seller is you would have to make a decision. Do I think this person can run the business? And you would probably not have the same interest in wanting to carry the debt for a long period of time. So you would likely want to have as big a down payment as you could get, which would mean that the buyer would have to borrow money. And you would be making a decision based on just new information about this person. You'd be trying to figure out if you believe that they'd be able to be successful running the business. And so there would always be this doubt in your mind about the riskiness of the deal because you didn't really know the person. And that's the biggest hurdle that most sellers have in doing a deal is getting their head around trusting, or it's literally underwriting because you're lending money to this person that you don't know. This is the big hurdle, is getting your head around underwriting this person you don't know. And that's the thing that's different for you because the buyer is a known quantity. It's a known aspect. And it really makes it a lot easier. And you know, traditionally through time, businesses are usually handed down through generations, right? And people didn't go to the bank. The son would take over the business in exchange for taking care of the parents in their retirement years. That was usually how it happened. If you think about how a farm would change hands 100 years ago or something like this, it's it's only recently and because of I mean the last century that people are actually buying the businesses on paper from the other family members, and a lot of that is driven by um, tax rules. Like you can't just give a business to someone. There is a tax consequence, and on the other side of things, the people that are selling the businesses usually are heading into a retirement of some kind, and of course they need money for that. So, but making an arrangement with your brother where he pays you over time, um, I think you're both going to come out a lot further ahead. And if things go wrong, you're going to have so many more options available. Um, you know, if he borrowed at the bank and ran into trouble, he could ruin his credit. You could have to deal with the bank to get the property back, et cetera, et cetera. with you being the lender, if things go wrong, he could just literally, you guys could drop a paper and he could sign the shares back to you. And you're not going to report to the credit bureau. He won't end up in trouble with the banks. Like there's so many more options as to how you could navigate that than if there was a bank in the middle of it.
Yes, makes a lot of sense.
Do you have loans? Do you have a mortgage or a loan on the property or the business right now?
Not one.
Yeah.
None.
So you're in the most flexible position that you could ever imagine, because literally all of these questions are just up to you, whatever you decide.
Yeah. Oh, I'm sorry. I lied to you a little bit, but I do have payments on the truck, but that's all.
Yeah. Well, truck loan is easy. You can probably just, if it's from, they're from like the manufacturer finance company.
Well, yeah, bank, yeah.
Okay. Well, vehicle loans, you probably just go down there and sign it over to them. Actually,
Yeah.
if it's in the business's name, you wouldn't even have to, because if he's buying the shares of the business, um, he just becomes, he'll just be the one that's liable under that contract.
Yeah, makes sense. Yeah.
Yeah. But I think your next step is finding the right advisor as far as a CPA to structure this thing and give directions to the lawyer. Because without a bank, if you decide to go this way, the timeline's entirely up to you. How quickly it happens or how slowly it happens. It's just a matter of getting the right advisor for taxes and stuff, and to determine how the share sale is going to happen, and then the lawyer doing up the paperwork.
Okay. Now, do you do this, that side of the business?
No, when I work with people, I basically tell them they have to have a local CPA to do this and a local lawyer. I tell people why and what questions they need to ask and what the conversations have to look like, so that they have an idea when they're talking with them if they're actually talking to someone who knows what they're doing. Because if you don't know anything about accounting, an accountant who's really not familiar with what you want to do could probably still convince you that they can do it. Right.
Right.
And that's the danger. And the same thing goes with lawyers. There's many lawyers are very upfront about practicing in certain domains like family law or real estate law and things like this. But especially when you get into a smaller community, you get a lot of lawyers who are generalists. And if you ask them, can you do this, can you do that, they just say yes to everything because they have to make a living. That's not
Right.
necessarily the lawyer you want. You want the lawyer who regularly does business transactions.
Yeah, they might be hard to find around here.
Well, it might mean going to the next big town, but if you have you don't want you don't want to let a relationship with a service provider put you in a position where you're not getting the right service and it might cost you in some way down the road. And I'm not saying that something's going to go wrong between you and your brother that is going to because you're going to have some kind of conflict. The kinds of things that happen are that the tax man decides to audit the deal and decides to, for example, invalidate your tax-free allowance for the shares because something wasn't done right. That's the kind of thing that you have to be wary of. That's why you want to make sure you're dealing with the right kind of professional, because the accountant is going to examine the corporation and make a determination if you qualify for the tax exemption. Well, if you don't qualify, they're going to tell you. And then maybe this strategy isn't as valuable as I'm saying it is. But if they tell you it qualifies and it really doesn't, well, then you have a problem, because you're going to move forward under certain assumptions and then find out later you have a tax bill. And that's not where you want to
Yeah.
be. So So you want to have an accountant who is familiar with private small business share sales and helping people get it all set up correctly. And when they say they can help you, you say, "Great. Can you give me a few names of people you've done this with recently?" People will ask roofers and plumbers and electricians for references all the time, and it blows me away that they won't ask accountants and lawyers for references.
Yeah.
And
Some
I think
people just
it's because people, these guys are professionals. They spend a long time learning their trade, and there's a certain expectation and a certain mantle of respect that society gives them. But if they're not doing this kind of work every day, they could make an error.
makes a lot of sense. You gotta do your homework, or you could get stung.
Hmm. But I think you're in a very envious position because a lot of people get to your point, Ralph, and they decide they want to sell, and then they have to figure out what their business is worth, and then the real roll of the dice is figuring out if they can find someone to buy it. And to have licked that problem from the beginning, um, you're in a good position. And it's just a matter now of having people who can get all the other pieces into place for you.
Right. I've already been answering the questions for the bank, which has cost me probably $10,000 already. Trying to
How?
get just getting property assessed, environmental assessments,
Right.
things like this done. And so I bet you if I know I spent close to $10,000 already just on that.
Yeah. And that's those kinds of things would have been, you wouldn't have had to do them if you hadn't been dealing with the bank. So, but you're not gonna undo that. I mean, the environmental assessment and stuff are going to be important factors that your brother can use for things like insurance for the business and stuff like that. Um,
Right.
and it probably, I mean, I would feel better knowing I was handing a business over to someone that had, didn't have a pollution problem, for example. Uh,
Exactly. And this way, at least we know that my price is not unreasonable. It's already been assessed, so the price is there, and
hmm,
so there's no guesswork there and that sort of thing. And he knows what he's getting, and like I say, for insurance purposes or anything else, it's all on paper. So
hmm.
he should be happy with that,
Yeah.
even though I
So,
paid too much to get it.
so, so, I mean, how's that? Have I covered the stuff that you wanted to cover today?
Yeah, basically, it was a good eye opener, and I did view your show with Ian
Yeah.
uh, back a ways, and the first thing I did was go see what Ian did, and but I didn't realize it was like selling the shares that he had done. And,
Yeah, if you
it
watch
was
that video, towards the end, he mentions it. He says that because he was willing to finance the whole deal, the buyer didn't have a problem buying the shares, and and that would have made the transaction even more lucrative in a big way for him. Um, another 30% basically in money that didn't have to go out to the tax man.
well, that's good. It sounds like the way to go. So we just gotta see if we can start putting this together,
Yeah.
and because the sooner I get it together, the more time I can spend in Florida.
Well, there you go. And it's going to be a hard winter, I think.
Yeah, there's no doubt about that. Yeah. Well, that's
All right,
great.
Ralph.
No, that was good information. So I'd like to see if you get the chance, come on up and enjoy the evening with us. Like to be a big crowd. It's kind of an open swinging door.
At your holiday
Have a
party?
good crowd. Come in,
Well,
you'll meet some interesting people.
cool. I'll try to stop in. Thanks, Ralph.
Still there?